Hello and a warm welcome to Portfolio Watch. I'm Gugulethu Mfuphi. Now in today's episode, we're going to take a look at keeping your portfolio healthy. By this time, investing in healthcare stocks. Now there's quite a myriad of options to explore, and we'll certainly be delving into some of those stocks. My guests in studio today are Victor Mupunga, who's a research analyst at Old Mutual Wealth Private Client Securities, and Aileen Campbell, Chief Investment Officer at Adviceworx. Lady and gent, such a pleasure to have you with us today. I would start off by saying what an apple a day keeps the doctor away, but I'm not too sure if that works for our portfolios. But let's start by getting a generic understanding of the healthcare sector. Sounds like quite a solid case if you think about a population which is actually aging and will need some kind of healthcare support in the future.
No, you're right. You're absolutely right, Google. I mean, it is a sector that is filled with many opportunities, and it's one that sort of interests everyone, if I could put it that way. You know, sort of from the young. They're interested in the sense of infant nutrition, and then the elderly, they need elderly care. Mm-hmm. From a policymaker perspective, you know, they also have an interest in it because it's one of those sectors that affects everyone. Businesses, they want the employees to be healthy because they're more productive. So certainly, you know, it's one that piques everyone's interest. But I think from an investment point of view, the key thing to highlight is that there are a lot of structural, sort of long-term attractive themes that play specifically to this sector. I mean, you mentioned at the start about aging demographics. And I think the number is about 70 years old. That's the life expectancy right now, the global average. And that's been slowly increasing over time and is expected to continue doing so. And, you know, as people get older, they tend to need more care. You know, you also have within emerging markets high fertility rates. So as people have children, there's need for maternity care. There's also a need for vaccination and all those sorts of things. And that all speaks to a theme that is growing, and that's what makes it attractive. Mm-hmm.
So growing themes, especially when it comes to the people element and growing demographics that you allude to. But what are we seeing from a preventative healthcare point of view? Aileen, have you seen particular trends where the interest is moving away from traditionalist hospital groups and pharmaceutical companies to these new biotech innovations?
I think with the introduction of technology, we are certainly seeing consumers getting more engaged in their healthcare regimes. I think they're a lot more discerning of the information they receive from their medical practitioners, because through technology you have access to a lot more information about your diagnosis, about how it can be treated, and alternative forms of treatment. So I think you know, the engagement between a patient and the doctor will change over time through the advent of technology and access to information. Mm-hmm. And I think what we'll see is that consumers will expect the healthcare fraternity to be a lot more transparent, to be a lot more affordable, and you know, so I think that will just change the engagement. And what it does, it puts pressure then on governments and healthcare providers or hospital groups, is how do we create more personalized healthcare plans?
Sure.
And we've seen some of that already happen in the United States under the Affordable Health Care Act, which is Obamacare. Yeah. And what's happened there is that governments are no longer reimbursing hospitals just for services. So they're moving away from a fee-for-service towards a value-based approach. And what that means is we'll reimburse hospitals based upon how well you've treated the client. What is the outcome for the client? Has it been a good outcome? So that completely changes the way that hospital providers now operate. How do you operate in a value-based system as opposed to a volume-based system? And as Victor said, there's an increasing demand for healthcare services, be it aging populations, you've got emerging markets which are richer now, and they in turn also need access to healthcare.
Sure.
So the landscape is changing very quickly, and then you've got a regulatory overhang as well. So it's a difficult and complex industry to be in.
Exactly. I want us to pick up on those themes that you alluded to, the affordability and transparency, and of course the examples made in the US. In South Africa, we know it's also quite a contentious issue with the recent updates that we've seen in the amendment bill of the NHI, National Health Insurance. That's also led to a lot of pressures from the local front. And how does that work out when it comes to the investing thesis and investment case for many of these healthcare companies who need to derive a profit at the end of the day, but that still also need to provide a service when it comes to good quality healthcare?
Now, look, affordability is always an issue when it comes to healthcare. You know, interestingly, you know, if you look at it on a global average perspective, I think average is about 10% of a country's GDP spent on healthcare. That's the average globally. You know, the US is on the higher end of that spectrum, spending about 20% of their GDP.
Sure.
You know, poorer countries spend around about 6% or so, and South Africa is around about 9%, so very close to the average. And yet one thing that you'll hear amongst the consumers of all of those nations is that we don't spend enough on healthcare. So I would probably argue that the issue is less so to do with how much you spend on healthcare, but rather how it's being allocated. Which speaks to the point that Aileen mentioned earlier on to say, if you're having more of healthcare expenditure being allocated towards preventative measures as opposed to treating ailments, then costs tend to come down. From a pressure on the operators within private healthcare, I think the issue of balancing profitability and meeting those pressures of funding constraints is a key issue. That we've seen right across the board. This is not a South African issue. I'm thinking of the NHS rather in the UK. They have been running universal healthcare for I think close to 70 years now, in the form of the NHS. And even up until now, they still grapple with the issues of constrained funding, waiting list with the NHS. So it's a big problem that the world over is trying to deal with, to say how do we continue to fund healthcare services, but at the same time to make sure that private players who operate within that market are able to generate sufficient returns to continue reinvesting within that sector.
Yeah.
And the NHI won't only affect our hospital groups, it'll also affect all our pharmaceutical companies, so companies like Aspen, for example, your medical device companies as well, because the way the NHI has been set up in South Africa is to be the primary service provider of all healthcare aspects. So they'll determine the protocols that doctors have to follow in treatments, they'll determine what equipment is made available, what fees can be charged for drugs, what fees doctors are able to charge as well. So it actually has a very broad and all-encompassing impact on the medical services industry in South Africa. And I think one of the biggest challenges with it, and certainly the NHS in the UK has the same problem, is funding.
Yeah.
So funding it is going to be exceptionally expensive, and we know that the fiscus is under significant strain at the moment. And they estimate it's probably going to cost about 300 billion rand a year to fund a proper NHS. And given that our economy is growing so slowly, that'll create a massive funding gap.
Yeah.
So this is going to be a very complex and difficult thing to implement. And of course, we have concerns around government's ability to execute.
A theme the world over, and of course we've actually seen many of our local South African hospital groups and pharmaceutical companies actually exploring opportunities outside of our borders, especially in the emerging market space. Now, a few years back, I think their balance sheets were a lot healthier to manage some of those pressures, but what are we seeing now? Blood pressures are up, right? Some heart palpitations too. Not looking too healthy when it comes to the offshore exposure that some of our local listed entities have.
You're right. You're 100% right. In fact, I struggle to think of any of the healthcare providers locally who've gone offshore and made a success of it. The reason why most of them were moving away from South Africa was to run away from sort of the regulatory issues here in South Africa with the promulgation of the NHI, as Aileen has alluded to. But you've seen that in most of those regions where they've gone to, regulation has actually been a bigger issue than it is here. If you think of the UAE as an example,
yes,
where Mediclinic went, I think a couple of years ago, they introduced co-payments to private hospitals, which is very onerous regulation that you don't even have here in South Africa. And they saw a significant decrease in their profitability in that market. Switzerland is another one as well, where there are issues there. So, I think the world over, I think when we look at South Africa, we sort of think our problems around healthcare are unique to ourselves. But,
sure,
even countries like the US, they're having issues with Affordable Care Act, which was implemented some 8 years ago. And, now that they're in an election cycle, you're starting to hear about Obamacare again. So this is a global issue that's not going to go away anytime soon.
Sure. Some real pressures, no doubt, and we'll get into some of the investment cases surrounding many of these stocks. Of course, exposure to emerging markets, and of course also taking a look at not only hospital groups, technology players as well within the healthcare space, and some pharmaceutical players too. But for the moment, let's take a look at some stocks to consider to keep your portfolio healthy. Well, of course, taking a look at some of the stocks that we're profiling and featuring today, investments within the healthcare space to make sure that you have exposure to this particular critical sector. And I'd like us to pick up on Mediclinic. We alluded to it very briefly when it came to the synopsis regarding South African hospital groups looking offshore. And Victor, this is certainly one that has come under significant amount of pressure, right?
And look, they've had a torrid time, over the last 2 years or so. And if we think back 3 years, this was probably the market darling in terms of healthcare, them and Aspen. And Probably the problem started when they invested in the UAE in the form of, I think it was Al Noor, the company that they bought there. And
then there's a difference in the listing, right, that took place as well in London.
Yeah, no, so it was a massive corporate action. And at the time, I think investors cheered that corporate action. And in hindsight, now it's clear that they paid too much for that asset. They went on to write down that asset. They've lost doctors within that region. Margins have collapsed, and they lost volumes, partially due to the regulatory issues that I mentioned earlier on. Since then, that business has sort of started to turn a little bit, but it's nowhere near what it was 2 years ago when they bought it. And it's still questionable whether they're going to get back to the profitability that they enjoyed before they got into the UAE. Another region that's a concern for them at the moment is Switzerland, which is often regarded as a stable, not changing economy. But at the beginning of this year, they implemented some changes as well to their healthcare legislation, which is affecting Mediclinic significantly, and I think at the moment that is the concern within the market, to say how low are those margins within Switzerland going to go, because you're seeing a trend where patients are moving from inpatient flows to outpatients, sort of that move to day clinics and the like, and that's putting a lot of pressure on Mediclinic. The part of their business that's actually doing okay still is the one in South Africa. And that's,
oddly enough, despite the pressures we have, right?
And that says a lot about how difficult they're finding it, that their South African operation is actually holding up. But even there, it hasn't been a growing business. It's more a case of, margins are sort of stable. We're not seeing the growth that we saw sort of 5 years ago when you were seeing job growth. So I think until you start seeing job growth and more people becoming insured and using their hospital services and volumes coming up, then I think this is one to be quite cautious about.
So from a valuation point of view, are you taking a hold stance on this particular one?
Look, valuation has come off, from what it was a couple of years ago. But that's largely because of the uncertainty. So I'd say this is one that's probably cheap for a reason, and we're staying away from it at the moment.
Staying away from it. Aileen, I'm not too sure if you share the same sentiments or have a different view on a competitor in that space, being Netcare.
So Netcare also made a foray into the United Kingdom, which they're now looking to exit. So back in 2006, they bought into General Healthcare Group, which then subsequently restructured into an operating company. And part of the operating company also had property companies. Now the property companies leased the property back to the hospitals. And what's happened over the last 5 years is that Netcare has tried to renegotiate these rental agreements. They've become exorbitant, and they absorb about 20% of their UK revenue. So that's put huge pressure on their profit margins and also pressure on capital, because you're having to refurbish your hospitals on a fairly regular basis. So they want to exit that position, but and they told the market around about March, we're looking to exit this position. They're still waiting for a buyer. And the problem is you've got these very onerous rental agreements in place. There's also a large amount of leverage in the property portfolio. I think it's about £1 billion. And then, difficult market conditions, and then you need to refurbish your hospitals as well. So I think they are struggling to find a buyer for their UK operation. And I think that has put pressure on the share price. It sold off in September following their trading update. So similar to what Victor said, showed very difficult trading conditions in South Africa. We saw a drop off in your higher margin business, like foreign patients who are coming in, increased demand for low cost hospitalization, and really a function of how difficult conditions are. So I'd be also very cautious on Netcare, just given the conditions, and they're waiting to find a buyer for their UK operation.
So 2 local hospital groups, and we're both very cautious on both Netcare and Mediclinic. Yep. Oh, it's a tough one. But stay with us. When we come back from the ad break, we'll explore some other themes and healthcare companies for you to consider, especially some of those that might be based offshore with an increased investment potential there too. But keep your questions and emails coming. You can email us at portfoliowatch@abn360.com or tweet us at CNBC Africa, #PortfolioWatch. See you right after this short break. Welcome back to Portfolio Watch, where our focus this evening is investing in healthcare. I'm still joined by my guests, Victor Mupunga, Research Analyst at Old Mutual Wealth Private Client Securities, and Aileen Campbell, Chief Investment Officer at Adviceworx. Now, just before the ad break, we certainly took a look at the hospital environment in South Africa, and of course, two of the biggest players, Mediclinic and Netcare, finding themselves under extreme pressure. So maybe we need to look for opportunities outside of our borders. What about Medtronic? Now, I think given the title of this particular company already, Victor, we can tell that there's perhaps some kind of technology element in play to this particular company.
Yeah, no, you're absolutely right. So, one of the risks that we highlighted earlier was regulatory. And one way to sort of reduce that risk is to find a company that's diversified in terms of where they operate and in terms of the product range that they have. And I believe Medtronic gives us that. They operate in some 150 countries or so. And in terms of their business segments, in fact, they were one of the first companies to commercialize the pacemaker, the cardiac pacemaker.
Sure.
So that has always been a big part of their business in terms of cardiac devices. But the technology part of their business comes in the form of a business or segment that contributes about 25% of their sales. And this is minimally invasive devices. So if you think about one of the key themes that you see within surgeries, that doctors are moving away from making large incisions when they operate on patients, but rather it's sort of small incisions and using robotics to carry out some of the more complicated procedures that they've done in the past. And one of the recent things that Medtronic has done, they've bought a business called Mazars Robotics, which assists with surgeries for the spine and the brain. And you really can't find anything more complicated than that. And that speaks to maybe something that we didn't speak about in the beginning, but some of the technological advances that are going on within healthcare. To say over the next 10, 15 years, the way the healthcare sector is operating, that's not going to be the way it's operating right now. And certainly robotics and technology is a theme that we see becoming of increasing importance, and Medtronic speaks exactly to that theme. And that's one of the things that's attractive. Also because the business is highly cash generative. I think they pay out about 90% of their earnings or so every year. And that speaks to sort of the defensive nature of healthcare companies, which we don't always see in the local markets. So this is certainly one that we think is interesting.
And the sustainability thereof, despite some of the regulatory pressures that you mentioned?
Yeah, no, look, so they've been increasing their dividend over the last 40 years consistently. So looking at the past, which is certainly not a guarantee of the future, they seem to be able to manage a lot of these regulatory risks well, but also that diversification. The third element of the third platform, I've spoken about two of them, the third platform of their business is speaking to diabetes. And if you think about it, diabetes and diagnostics and the first segment that I spoke about, they're all very different. So if you have regulatory risks in one, they're certainly able to lean on the other. And I think that makes it a lot more defensive and a lot more attractive.
Yeah. Certainly one for us to consider for our portfolios. Certainly. That's Medtronic. So perhaps a buy opportunity there?
Most certainly, yeah. I think that's an interesting one.
Most certainly a buy opportunity. Interesting that you also touched on the preventative healthcare element being their focus on diabetes and of course that particular treatment, which also leads us to another company being Johnson & Johnson. I think for the average consumer who hears those two names, you're probably thinking baby bum cream and Vaseline. But there's so much more to this company than just that, right? Aileen, would you like to touch on Johnson & Johnson and of course the investment fundamentals and just their far-reaching global reach?
So this is a really globally diversified company. So in addition to the baby shampoo and bum cream, they have a large pharmaceutical area, which is about 50% of their global revenue. And they specialize in oncology and immunology. And quite interestingly, they've just collaborated with Boston University to try and detect the early markers for lung cancer, because lung cancer is one of the leading forms of cancer mortality, and it's very difficult to detect early signs of cancer. So they're working with Boston University around those early markers to detect cancer. And then they're also very well known for their medical devices, and that's about 30% of their global revenue. So if you think about knee and hip operations, replacements for knee and hip joints, and again, they're also using technology in this space quite interestingly. What they've designed for surgeons is a virtual reality headset. So you can put this headset on and you can actually practice those operations, so a hip replacement or a knee replacement, many times over before you actually get to work on the patient, so just to perfect your skills. Wow. But yes, a globally diversified company, highly cash generative. But I think a thing you need to understand as an investor, unlike technology companies, these companies are not going to shoot the lights out when it comes to their revenue or earnings growth. So revenue, you would expect them to grow probably, in the lower single digits, like maybe 5 or 6% in dollars. Earnings will probably grow 7 to 8, 9%, but you get a nice dividend yield of about 2.5%. So these are the steady eddy kind of investments of your portfolio, your more defensive attributes in your investment portfolio.
Sure. And regarding the fundamentals of the company, dividend payout, net asset value versus its P valuation?
Yes. So listen, you're always going to pay up, I think, for quality. It's never going to be a very cheap company, but you understand why you're buying it, and it's a quality company. And I think you buy it for its defensive attributes in the portfolio.
Certainly one for us to keep in the long term. So is this also a buying opportunity that Old Mutual is considering here, Victor?
Yeah, no, certainly. I mean, Johnson & Johnson is one of the holdings in our global portfolio, and as Aileen has highlighted, it's that diversification that you're looking for in a business such as this. Not going to shoot the lights out, but I think in the market wobbles that we saw in October, that was one of the shares that actually stood out globally in terms of holding its own, and I think it's for periods such as that, why you include a Johnson & Johnson in your portfolio.
Makes sense. What about Danaher, one that isn't very familiar to the retail investor, but introduce us to this particular company?
Yeah, so Danaher is a very diversified industrial company. They have 4 segments that they operate in: life sciences, diagnostics. But the reason why I think it's pertinent when we're talking about healthcare is because one of their 4 segments is the dental segment. Most of us, when we think about the dentist, we tend to shudder, and try and avoid our 6 months visit to the dentist. But for everyone who goes, that this is sort of a steady, recurring sort of revenue. It's unlikely to shoot the lights out, but it's speaking to a market that is growing at about 4 to 6% on an annual basis, and it's quite attractive. And Danaher have come out and said sometime middle of next year they're going to spin out the segment of their business into a separately listed business, that dental segment. And for us as global investors, I think it highlights again the opportunities that you see on the offshore side. You're not able to get those kind of opportunities in the local market to invest in a specific healthcare segment such as dental. So globally, it's not a massive sort of segment in terms of dental. I think it's about 30 billion in size, but it's growing between 4 and 6% or so. And with Danaher, right now they're the second largest supplier to that segment in terms of everything that you see in a dentist's office, from the chair to the drill bits to the braces and all of that. And I think in Danaher you're getting exposure to that market. And next year when this segment is separately listed, we'll again relook at it and think, if it's something that's worth keeping in the portfolio and adding to.
Sure. So possible participation in the IPO there.
Absolutely. Yeah, and I think another reason for Danaher is for investors who are looking for a company that is making a social impact. And one of their other businesses is diagnostics. And they've actually created a machine that uses cartridges to specifically identify diseases. And this was particularly useful in the Ebola outbreak in West Africa in 2014, because the difficulty is to set up a lab and actually test for Ebola. It could take weeks, if not up to months. So the Genie Expert is a diagnostic machine where you insert a cartridge that looks for a specific kind of disease marker. And they were able to diagnose Ebola now in a matter of hours as opposed to a matter of days.
Wow.
Or months or so it really decreased their turnaround time substantially. It's also used extensively in South Africa to detect diabetes, your tuberculosis as well as HIV. So again, investing in companies that are making a social impact is definitely something worth considering with Danaher, because also involved in water quality and food quality, so a number of diagnostic activities to try and improve global health standards.
Sure. And when you think about the pressures that we face across the African continent, being cholera, malaria, and of course the Ebola outbreak, that's certainly one to consider for the conscious investor. But as we wrap up though, we've certainly touched on so many dynamics when it comes to healthcare, and it sounds as though we've literally touched the tip of the iceberg. But what are the key considerations to also bear in mind, given that there are medical insurance companies available on the market, other pharmaceutical groups that are also available within the South African environment and globally, and of course some of the elements to look out for when it comes to understanding the investment fundamentals versus what's playing out on the market dynamics?
I think when one reads sort of the headlines, particularly here in South Africa, you see NH High, people think, are there going to be any investment opportunities going forward within the space, when government encroaches within that space. But I think the key sort of highlight is, or the key important point to highlight is to say that there's always going to be a need and a space for private operators within healthcare. I think if you look globally, even in developed markets, I think the expenditure to healthcare from the private sector is about 40%, compared to the government, which spends 60%. Within emerging markets, it's actually the reverse. So regardless of sort of the regulatory concerns that we have, there'll always be a space for the private sector to play within that market, because government on its own is actually not able to meet all the health needs of its population. And so probably partnership is the way to go as far as healthcare is concerned going forward.
Yeah. Aileen, your considerations?
Yeah, I think just be aware of the regulatory impact on companies. So you might want to look at other companies that are maybe more defensively positioned or are not subject to the same extent of regulation as, say, your healthcare providers and your insurers are. So companies, that are focusing on devices, for example, that service the medical services industry might be have slightly more defensive attributes. So something just to keep in mind when you are selecting shares for your portfolio.
Sure. And if all else fails, get your portfolio in for a checkup. Pun intended. Well, a big thank you to both my guests this evening joining us to give us some insight into opportunities within the healthcare industry. That's Victor Mupunga, Research Analyst at Old Mutual Wealth Private Client Securities, and Aileen Campbell, Chief Investment Officer at Adviceworx. And of course, thank you so much for joining us and tuning in today. If you have any questions, suggestions, or feedback, keep them coming. Tweet at CNBC Africa and use the hashtag PortfolioWatch, or email them to portfoliowatch@abn360.com. Until next week, have a good evening further.